All right, time now for a look at the day's top business news, starting with the latest in the tit-for-tat trade war between the U.S. and China after a new round of tariffs is announced by each side. Brian Quinn here to tell us all about it.
Well, Will, that trade war just last week appeared to be winding down, now definitely heating up again after Donald Trump's decision to raise tariffs on $200 billion of Chinese goods from 10 to 25% on Friday. Beijing has now announced it will hit back by hiking tariffs on around $60 billion of U.S. imports. The U.S. Trade Office is preparing new tariffs on another $300 billion in Chinese goods, but Trump says he has yet to decide if those will be implemented. Well, despite Trump's erroneous claim that China is paying tariffs to the U.S., it's clear both sides are taking damage. So who's really paying? Georgina Robertson takes a closer look.
Putting on brave faces, both sides claim that they're where they want to be in this trade war, but their economies are taking a hit. And while China is still America's top trading partner, with exports rising 7% last year, trade flows to the US have reduced as the duties bite. It means that in the first quarter of 2019, Chinese exports to the US were down $45 billion, and the US exports to China down $39 billion. It is the governments at loggerheads, but it's consumers and companies who pay. A report released in the US calculated that tariffs cost US firms and consumers $3 billion a month in additional tax costs. Washington is currently threatening a 25% tariff on virtually all Chinese goods. This could reduce China's exports to the US by $170 billion over a year. Particularly hard hit on the US side are the soybean farmers. Soybean shipments to China all but dried up last autumn after Beijing hit them with a 25% tariff. Last year, the US government put together a $12 billion bailout program for farmers, but this has not been enough.
Coming into this trade war, we knew soybeans were going to have a target painted on their backs, and obviously they have. And we've been hit hardest as far as soybeans. We just want to see this thing get over with. We don't want to see trade aid packages, and we want to see this resolved, get back to business as usual.
This could hit Trump where it hurts: voters. As bilateral talks are expected next month, the parties are still hoping for a resolution.
Well, investors clearly rattled by those most recent trade tensions. Wall Street had its worst day in months, the Nasdaq finishing down nearly 3.5%. Asian indexes faring not quite so badly, mostly losing some ground. Nonetheless, Tokyo's Nikkei index finishing the day down around 0.6% as shares in SoftBank continued their slide there. Chinese indexes off as well. Shanghai down around 0.2%. That index, though, does get a lot of central government support. Hong Kong's Hang Seng has a lot more international exposure. It's down around 1.75%. The Kospi in Seoul lone bright spot as Samsung shares recovered there. It finished the day just slightly in the green. European indexes bouncing back a bit to open in positive territory. London's FTSE 100 and the Frankfurt DAX opening up around 0.33%. The CAC 40 here in Paris up 0.5% at the opening bell. Next, a California jury has ordered agribusiness giant Monsanto to pay more than $2 billion in damages to a couple on the grounds that its weed killer Roundup was the cause of their cancer. That eye-popping sum likely to be reduced on appeal, but it's the third legal defeat since August for Monsanto, which still insists the glyphosate-based herbicide is not carcinogenic. California juries have already awarded nearly $270 million to other cancer victims in a Roundup lawsuits. A major headache for German firm Bayer, which acquired Monsanto in 2018 for $63 billion. Bayer's lost nearly 30 billion euros in market value since that merger. Lawyers for U.S. plaintiffs say those liabilities are only going to deepen.
This is not the end, okay? This is not the end of this litigation. This is the beginning. There are tens of thousands of people out there, probably 20, 30, 40,000 people. And I have continuously told Bayer and Monsanto we're coming after them. We are not slowing down. This is the beginning, not the end.
Well, finally, for business, with spring art auctions kicking off this week at the likes of Sotheby's and Christie's, the Wall Street Journal is reporting on a new investment scheme pledging to buy artworks that you expect to be outbid on. Those who sign contracts with auction houses to buy pieces for a set price can collect as much as a third of that price when they're outbid. Such third-party guarantors have already reportedly pledged to buy scores of works worth over $600 million this year. The practice is credited with propping up some of the recent extravagant advances in the art market. Last year, the market saw a record 539,000 lots sold at a total of some $15.5 billion. So, well, now it's not just the art that's over my head, it's the buying schemes as well.
Just want to double check. You're paid to not pay for something.
That's isn't it great?
Are you going to get on that action?
There is a risk because maybe somebody doesn't bid on it and then you're stuck paying however many millions of dollars you've pledged for a horse that's cut in half or something.
Finally found an art market I can afford, Brian Quinn.
Look into it.
All right, thanks very much, Brian Quinn, with the update of the day's business stories.